So we're seeing 0% down mortgages now make a comeback in the US housing market. More and more builders are offering these 0 down mortgages. We're even seeing more and more desperate resellers on the market turn to financing their properties. These are signals that we last saw in 2006, 2007 before the big bust. Well, they're cropping up again, and the builders and the investors are having to get desperate to move the inventory. I just went to a home building site in Florida a couple days ago, and I saw a big 0% down sign. I turned off the highway when I saw it toward the builder site. Do you know what I saw, everyone? They had 22 houses built and available for sale. 22 spec homes.
Man, we're beginning to see the same remnants of what happened in 2006 and 7, which led to the 2008 housing crash. We're going to talk about what those remnants are, those variables that's happening right now in this current market. And we're going to talk about how you as a home buyer and an investor can take advantage of this volatile housing market. Man, this is going to be fun. Let's get this thing. You see that thing, baby? Let's get it. Let's learn. And let's go.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from when I brainstorm.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Cliff, how you doing, big time? You doing all right, big dog?
Man, I'm doing good, Busy week, a lot going down. I know y'all paying attention to the markets, man. It's wild out here,
we are, man.
But your boy doing good, man. Doing good.
Yeah, it's been a good week for your partner too, man. It's been real busy, but it's been good busy, man. I got a couple of assets that I'm looking at. I may liquidate some assets because I don't normally flip some properties, but hey, I got a couple offers on my properties, man. I may take them, big dog. I may take them, man, just to push some cash in the bank. You know what I'm talking about?
Oh,
you know what I'm saying?
Cash is king, man.
Yeah, so but Cliff, did we get the bag?
Got the bag, bro. Got the bag.
Yeah, matter of fact, before the show, man, Cliff got another bag. Before we actually was on the thing, baby, we get another bag. That's what we do. But man, let's dive into this thing, man. Cliff, man, we haven't done one of these in a little bit, man. Real quick, if you guys could, do us a favor before you do this, like and subscribe, guys, and share. If you don't mind, this is gonna be one of those good ones, baby, because we're gonna talk about the current market analysis in the second and. Does the market look like 2008? But let's dive into this current market now. Cliff, man, what are you seeing right now in the market as a licensed appraiser, educating people what's going down in the market? Big dog.
Man, I see transactions starting to tick up. I'm starting to see that a little bit more. I've seen it kind of pick up. I mean, let's be honest. Last about 2 years, it's been pretty slow.
Yeah.
A year and a half, 2 years as they raised interest rates. I just saw it completely, slow down. But now I'm starting to see it just come back a little bit. Nothing crazy, but I am starting to see more transactions come through. The buyers are starting to come back in, and at least in the DFW area, I'm starting to see it come back a little bit. The application volume is coming back a little bit, so we're going to see if this trend continues.
Yes, sir. I'm seeing a little bit as well. It's more from an optimistic standpoint. I'm not seeing a lot of refis at all because it didn't make any sense to go from a 2 or 3% up to a 7, 8, 9%. But I'm seeing a lot of builders give a lot of incentives, a ton of incentives, and it's more so on the HUDs, right? More so on the HUDs, and so you'll see a lot of them also. What they're doing as well is they're cutting some of the pricing too. I'm seeing a lot of cutting of pricing too, which is not uncommon. That's not uncommon at all. Specifically when you have a kind of a stagnant market. I would say it's kind of volatile a little bit still. because of the fact that this capital is too expensive to get it right now. And people with a new administration, you're trying to see how the market is going to kind of either go left or right or stay center. And you kind of see President Trump and Fed Chairman Powell of the Federal Reserve Bank, they're at odds. Of course, Trump wants the rates to come down, be cut. And Fed Chairman says, no, I want to keep it the same. And I actually agree with the Fed Chairman because of the last 5 years, 40% of the entire nation's currency has been printed in the last 5 years. 40%. That's a lot of false fiat made up money. A lot of it. You agree, Cliff? You disagree?
No, I mean you're right. I mean they just keep printing money, which is wild to see that they just kept going with it, and that was a policy, which is wild too because the Fed is filled with I think 100 PhDs, and that's the conclusion they came up with: print more money. Sure, yeah, they don't need 100 PhDs for that, but
at all. But guys, y'all didn't come here to talk about this. Let's dive in this thing. Hey guys, real quickly here, man. Yo, Cliff, bruh, I'm hearing reports and opinions from people saying that today's market smells or is giving some signs of flashbacks to 2008. And I said, what you say, Chuck? Oh, okay, but hey, let's bring in our guys from Reventure app real quickly, and he's going to talk about this real quickly, guys. And we're going to comment on what he's saying, and I want you guys to pay attention initially to what he's saying from the get go, and watch. Remember, me and Cliff, we talked about builders and some uptick in some transactions, and also you're going to see later on in the video, also with this gentleman, another strategy that the builders are using to kind of fudge the numbers, so to speak. Let's get into it. Here we go.
So we're seeing 0% down mortgages now make a comeback in the U.S. housing market. More and more builders are offering these 0 down mortgages. We're even seeing more and more desperate resellers on the market turn to financing their properties. These are signals that we last saw in 2006, 2007, before the big bust. Well, they're cropping up again, and the builders and the investors are having to get desperate to move the inventory. I just went to a home building site in Florida a couple days ago, and I saw a big 0% down sign. I turned off the highway when I saw it toward the builder site. Do you know what I saw, everyone? They had 22 houses built and available for sale. 22 spec homes priced around $280,000 to $330,000.
Okay. Good
and they can't sell the inventory. So how do they get people through the door? They say 0% down.
So Cliff, hold on. In the past, we talked about this here. We talked about how the price point of $300,000, $350,000 and below is selling. Well, LGI is a very well-known kind of a low income, low price point builder. They're having trouble liquidating these properties at $285,000. There's 26 spec homes still available, and they're trying to attract a lot of people coming in with 0% down. Before we go a little bit more deeper into the video, Cliff, what are your thoughts on this, man?
Well, so I do know LGI. So basically their product is they do 0 down as a core part of their business. That they are going over that low, cheap, person who's just trying to get into a home.
Yeah.
So that's not unusual to see them go 0 down. That's probably their own in-house financing.
Okay.
Right. That's really offering that.
Sure.
And let's be honest, it's not too much different than 3% down. I mean, that's
It's not
crazy percent down,
No.
especially on their homes like 300,000. They're talking about $8,000 difference.
Sure.
So,
yeah. That makes sense. And you're going to see in a second how they're able to do this and kind of fudge the numbers. Let's keep it going, guys. But you're going to be very surprised at what they do. You're going to be like, what the hell? But let's get into it. Here we go. Let's go back to the video.
And these are kind of the anecdotal warning signs that I think a lot of you guys have been waiting for. A lot of you guys are waiting to buy a house. You're waiting for prices to drop. You're saying, when's it going to happen? Well, these warning signs keep stacking up on top of each other. And this is particularly pronounced in the home building market. Because
Yeah.
home builders in America now have around 500,000 homes for sale. That is the highest level of home builder inventory since 2006 to 2008. And it's the second highest level ever. So I want you folks to think about that. Outside of a 2-year period right before the last crash, this is the only time we've had this many home builder homes for sale in America in history. Meaning that there's excess supply building up. There's inventory building up on the market. And the more that inventory builds, the more downward pressure there's going to be on home prices. However, the interesting thing is that many sellers in the US housing market aren't yet realizing this. A lot of sellers are still coming to market and listing their house high. Where I am right now in Chattanooga, Tennessee, I look around Zillow, I look at the listings, and a lot of them are ridiculous. Chattanooga is a town where the median household income is around $75,000, and you have people pricing 2-bedroom townhomes at $450 grand.
Damn.
A lot of the sellers here in many other parts of America just still haven't woken up to the fact that this housing market has changed. And it's almost as if sellers are gonna like pull out every stop before they just have to actually cut the price. Like they'll try to offer a 0% down mortgage rate, they'll offer a mortgage rate buy down, they'll try to rent it for a bit, maybe they'll pull it off the market and renovate the house. Sellers are in such a state of disillusion and cognitive dissonance that they're gonna try every possible angle before doing what they need to do, which is cutting the price. And I actually polled you guys on my channel and I asked you the question, what is your budget for buying a house? You know, say you were to buy in the next 3 years, what would be your max budget for a house that you really liked? And the results were really interesting. Roughly 30% of you have a budget of $250,000 or under, which, you know, if that's your actual budget, it's gonna mean you're gonna be on the sidelines in this housing market right now. Because you can't really buy a house for less than $250,000 pretty much anywhere except for Oklahoma. Around 45% of you said.
And surprisingly, Oklahoma is extremely affordable.
Oklahoma City, I've been saying it for I don't know how many years, Dale, that it is one of the most underrated markets is Oklahoma City.
I've heard nothing but great things about. I guess what sets Oklahoma apart from other states, Cliff, in your opinion?
You know what? It's a lot of land. There's still plenty of land out there. If you drive, so I went out there a couple of years ago because I was looking at flipping out there. I even went to the auctions. I drove around. Great market. The problem is, right now, it's the cost of living is so low because there's not a lot of there's a decent amount of business.
Sure,
but it's growing. I would say it's a slow growing city.
Makes sense.
It's a good sized city, but it's slow growing.
Makes sense.
But in terms of price of the homes, oh my gosh, you could still get homes under 300,000 that are amazing. There's when I went out there, there was several subdivisions being built.
Wow.
There's basically, I would say what makes it great is the fact that it's like Goldilocks a little bit. It's not a ton of demand.
Yeah.
But there's not also a crazy amount of supply. It's that perfect mix where there's a lot of people who are moving there, but not so much like California coming here to upset that market.
Yeah, I would say now I see the reason why Kevin O'Leary and other big time investors are developing data centers in Oklahoma because of the tax incentives, the land, and the cost of doing business there. Oklahoma is probably, I would say, as far as efficiency, maybe third or fourth, top five in the nation as far as efficiency, as far as from a governing standpoint. Great governor, great House, great Senate. I've heard nothing but good things about the city: Stillwater, Norman, Oklahoma City, Tulsa.
Norman, great man,
boy,
amazing area.
Norman, Stillwater is an amazing area. Stillwater is kind of like a Greenville type of feel, maybe a Terrell type of feel, but a little bit more robust, a little bit. But I mean, because the big business is Oklahoma State University. That's the big business.
And exactly. And when I went down there, if you go to North Oklahoma City, it looks like Frisco.
Really?
Oh yeah. They have a top golf area. Look, just if you go north, it looks exactly like Frisco, Texas, which is a high-end area, a lot of new construction. A lot of
Mm.
large homes. That's where so you have North Oklahoma and
Yeah.
South Oklahoma. South
Yeah.
Oklahoma is a little bit more beat up. You've lived some older homes.
Yeah.
Huge rental population out there too. A lot of renters.
Yeah, I've seen that. For instance, in Memphis, Tennessee, Memphis is known as, I think, the rental capital of the nation. Memphis, Tennessee. We've
Yeah.
been up there before. It was a,
Yeah.
but for my language, it was a shit show. It was a shit
You ain't
show.
lying.
Shit show.
You
I was
ain't
like,
lying.
what is this? What is going on here, man? It kind of hurt our soul, man, because it was
Yeah.
us.
It
It
needs
was
help.
us. It
They
needs
need help.
help. A lot of help.
Mhm.
And we see opportunity, but just
Yeah.
watch out where you're going over in Memphis. It's kind of rough out there a little bit. Yeah, in Memphis, man. Cliff, what do we see, man, downtown? We saw boarded up skyscrapers,
Yeah.
boarded
Crazy.
up police departments. The nicest buildings in Memphis was a Chick-fil-A and a
Yep.
McDonald's.
Yeah, they were the nicest, by far the nicest.
It's ridiculous, man. How in the world? Who? And the thing about it is we running it. We
Mhm.
are. The mayor was a black man. Most of the
Mhm.
city council were black. Now the county judge, which is really the mayor, he was white. That's fine, but it was
They
ran
need
horribly.
they need investment. They need someone
Oh,
to come in there, and they need investors to come in there and bring some economic vitality to that city, some more income, some more money. They need a manufacturing plant, something,
but they already had that.
something.
UPS, FedEx, UPS, and Nike's there. What happened?
Yeah.
They're there. Memphis
I mean,
Grizzlies, they're there.
it's an older city, and
Yeah,
so it's almost like when you see a lot of older cities, Baltimore,
yeah,
Cleveland,
yeah,
Akron,
yeah,
you know, with
yeah,
them, when I see those older cities like that, unless you have a strong core business base,
yeah.
because you look at or something like Boston. Boston's an older city, but it has a strong economic base.
It
If
does.
if you do, you turn into Boston. If you don't, you turn into Memphis.
The same thing
Where's
happens with Philadelphia. Philadelphia and Boston are kind of
right?
built the same thing. They're built up. It's like they're on top of one another. Gorgeous city. Philadelphia is gorgeous city. Now you have some areas you like. Hold on, wait a minute, don't go over there because it's kind of But if you go down,
Right.
if you go downtown, man, oh, Cliff,
Yeah.
Philadelphia downtown is stunning. From the Philadelphia Museum, oh my word! But it's just to buy something there is crazy. But you're right. If without there's so much money flowing through Philadelphia, so much money flowing through there. It's robust versus a Memphis. You're like, okay, yeah,
Yeah.
it's. I mean, what did we see? Cliff? We were looking at buying an apartment complex out there. I think it was what 168 units, somewhere around there. And
Mhm.
Cliff, we pulled in. Cliff was like, "Why are these wires out? Like, why is the water coming down directly on the HVAC, the condenser outside? Why are all these materials outside?" And the at the time owner was like, "Oh, that passes code." Cliff said, "What? This past code?" Yeah, it was exposed wires everywhere.
Yeah,
It was bad.
I think while we were there, someone got robbed, right?
Somebody got yep. There was a fight there, and that place was considered the safe one. The safe one. You know what
Right,
I'm
I
saying?
know. It's wild, man, because it's like it's abandoned. That's what I would say. It's an abandoned city. There's not a lot of if I was if you're the mayor, if you have a city that's kind of going down like that, you have to do
Yeah,
whatever you have to bring jobs, bring
you got
money.
to.
And the problem is with older cities is if you try to revitalize it,
You
it
do.
costs a lot of money for those old buildings.
It
A
does.
lot of money.
A ton of money. It does.
Mhm.
It's I don't know, man, but again, Oklahoma, great state to do business in. Texas, great state, except Austin. Austin is severely overinflated. Matter of fact, there's a mass
Yeah.
exodus out of the state of Texas from the city of Austin, not the Dallas, not Fort Worth,
Mm.
not H Town, not San Antonio. It is Austin because everybody from California, Oregon, Washington D.C., whatever it may be, came down to Texas during COVID, and they
Right.
began overbuilding Austin. And I was a part of Valuetainment's real estate Zoom they did in 2022, I believe, somewhere around there. And I kept telling everybody, hey, Austin's gonna be the first one to go because it's severely overbuilt. I was actively asked to invest in Austin, whether it be from a lending standpoint or from an investing standpoint when it comes to me actually building homes. I said no because it made no sense at all. They were building too fast during COVID. It didn't make no sense to me at all. And now you're beginning to see a mass exodus out of the city of Austin. Austin is the worst ran city in Texas. Let me give you an example. You understand, guys, that the Austin City Council voted for the Austin Police Department to not cover murders. They cannot investigate murders.
What do you
Only
mean they can't investigate? What you mean?
they can't investigate it. You know who does it? The Texas State Troopers. Yes,
Not
I
the
ain't
city.
lying. Yes, for the city of Austin. Yes.
Yeah,
Sad.
that don't make sense. That don't make sense.
Because it was part of the defund the police movement. Yep.
They wanted less restrictions
Yes.
on the police. So they said
Yes.
take as much stuff as they can. That's probably a big one off their,
Yes.
investigation team. Right. Damn.
Yes, and then you have builders like LGI who we were looking at before. You know what they're doing, Cliff? Is the ones they cannot sell, right? Because they've been on the market for a long period of time. You know what they're doing to fudge the numbers so they can actually begin to build more homes? What they're doing is they are leasing out the lion's share of those properties, so that gives them the reason to continue to build. Because they borrowed that money, that construction money at interest only debt, right? Paper to keep building. So they got to go to the next phase.
Yeah. And LGI, the way that the key to their whole business plan too is how they're building out is they pick land that it doesn't have a lot of demand for it. It's kind of out the way. Like if you were trying to build on the edge of town, there's a piece of land you could buy. LGI builds outside of that. So they're like kind of far out. That's how they build their whole little community and then offer cheap prices. Because you got to drive a little bit to get out there.
Correct. And I see my man D Love on Instagram. And D Love, concerning what's going on in Austin, that came directly from a friend of mine that actually works currently for the Texas State Troopers. He's a veteran with them. That came directly from him. I didn't believe him, but came directly from him. I just said, "Oh wow, that's crazy." So they may have changed it. I don't know, D Love, but all I know is from what he told me, that is the case when it comes to Austin. If that's the case, I'm like, this is a reason why Austin is not as safe as people think it is. It's not safe at all. It is not, and unfortunately, Austin is the state capital. The same thing when it comes to Jackson, Mississippi. That's what they call Jackson, Iraq. That's what they call Jackson, Iraq. And yo, Cliff, tell them about Jackson, Mississippi. We actually invest heavily in Jackson, but we got to be a little smarter. You agree, Cliff?
Yeah. Because I mean, Jackson's a falling market, so it's harder to invest where you have a lack of demand.
Correct.
And so you have to kind of understand the Jackson market to say what's going on. Is the demand in certain areas, and you start to find that it looks like it's pockets. Yeah. Demand is going in pockets, or it's outside the city, and so it requires you to have a little bit more refinement in what you're looking for. You can't just buy anywhere. You got to understand, and that's why it's nice to have people who are experts at what they do on the market. Yeah, in the field, who know, hey, this area, you might want to move and start focusing on another area where you have stronger demand. So
correct.
Yeah, man, you just got to know that.
You got to know that, guys. Now, we talked about what's going on with the economy and how it's given some signs until 2008. What I'm seeing, guys, is, of course, builders can't sell properties, right? Number two, we need more inventory, right? Number three, you have active current owners who normally put their property on the market to either to go up in a size of home or go down. That's not happening at all because they're not going from a 2% interest rate up to a 5, 6, 7% interest rate at all. So you have a lack of inventory on the market, and you having builders trying to supplement that, but they're not able to sell their homes. So what they're doing is they're offering either 0% down, right, with incentives. We're going to talk about We're gonna talk about home builders in a second. In the second, how home buyers, how investors can take advantage of that as well, and they're looking at leasing as well. So it does, from that variable, smell a little bit like 2008. It does. It's different. It does in some remnants, not at all, but there's some
Unemployment's
remnants.
still low.
Yeah, but the thing about it is who is actually how are they counting unemployment numbers
Yeah. Oh yeah. Those are always going to be fudged a little bit. They're going to mess
all
with
the
them.
time.
But I think what you're probably more going to find, you're not going to see. I don't think you'll see a collapse, but
Yep.
I think you'll see a softening. That's
Yes,
my
you will.
perspective. That's how I see it.
I can agree with that. I agree that it's going to be a softening. I think me and Cliff had went back and forth on this
Yeah.
over the years. But at the exact same time, who is okay? The exact same time, we kind of agree now when it comes to the softening, because here's what Donald Trump is trying to do, guys. He's trying to, and I'm gonna go over here real quickly, and so this goes right into this next segment. He's trying to expand the money base without expanding the money base by using cryptocurrency and mimicking the banking system from the Federal Reserve by using crypto, right? Because him and the Fed Chairman Powell are actually they're going at odds right now. They are. Now, how can he do that? And Cliff, let me know if you agree or disagree. The Federal Reserve Bank, what they do is they create debt via bonds. I mean, they create money via bonds, which is debt, right? That money is then funneled through the banking system, right? The bank then gives out loans, right? Fractional reserve lending out loans, and money's flowing that way, correct?
Mm-hmm.
What Trump is trying to do on crypto is he has two Federal Reserve, he has a Federal Reserve digital assets when it comes to Bitcoin and cryptocurrency. He's flowing that through the bank system, the same way the Federal Reserve Bank is doing as well also. And the banks have their own coins, which is going to be backed by the dollar, right? Because 95% of all the cryptocurrencies in the world are done via the US dollar. 95%. That's crazy. So he's mimicking the flowing of the money the exact same way as the Federal Reserve Bank. Now that money goes down to the banks, do you think the banks are going to fractional reserve that as well also? Yes. So the banks can now fractionally reserve not only the dollar, but also the cryptocurrency at the exact same time. So Trump has now,
I see.
you
Yeah,
see what I'm
I see what
saying?
you're saying. You're saying that they can actually they can create Tether, they can create other cryptocurrencies using the fractional reserve
Yeah.
system to artificially
Yeah.
inflate what they're already doing. They're just going to do it in crypto.
Exactly. So what Trump is saying is, I'm going to force you, the Federal Reserve Bank chairman, to lower the rates because that's going to bring the money off the sidelines back into your system, Federal Reserve. So you have to lower the rates. That's going to also allow for home buyers, to be able to get more competitive loans and services from your bank. Think about it, Cliff. With this play, you may see a 4% interest rate. You may.
Yeah, and I'm seeing rates already drop last couple of weeks with
Mhm.
what they're trying to do, which is crazy. To kind of see that because what's happening right now and what's going on in the markets is pretty crazy. But yeah, the crypto
Yeah.
play is interesting because what's going to do is create more cryptocurrency within the market, more dollar denominated cryptocurrency within the market
Correct.
that is going to inflate that market. But
Correct.
I'm wondering because Tether, for example, the only reason why it has credibility is because
Okay.
it's backed by it has reserves to show, hey, there's $1 billion in Tether, we got $1 billion in cash or um federal deposits in the account. So it's like,
Yeah.
okay, cool, it's worth something.
Gotcha.
But if Bank of America is just printing their own crypto, how is the value of that crypto if it's just based on Bank of America's word?
No, because it's based on the same thing, the same system that makes the dollar bill valuable, backed by
Right.
the full faith of the federal government. It's the exact same play.
So the federal government is willing to basically insure the cryptocurrency of
Correct.
banks.
Correct. That's why they have two different reserves. They have two different reserves in the crypto space. Two. I just said, God dang. Why do you think that JP Morgan Chase is going so hard to pay when it comes to cryptocurrency? Bank of America, Wells Fargo. What do they know we don't know? They knew what Trump was going to do, which is what? Mimic the current banking system, but in the crypto space. Because crypto and the federal government have been at odds for a lot of reasons, because crypto is decentralized. Now it is centralized because the government is saying, we back it now. We back it now. So now Trump is going to say, okay, bank, fractional reserve on this, on your coin, because your coin is backed by our dollars, which is just the federal government. So you can Federal Reserve that thing. Federal Reserve lend it.
So they're just going to create more crypto.
Yes.
So what that's going to try to do is it's going to try to keep the dollar in crypto, and so it's going to say in that new financial arena, the dollar is still strong. So other
Correct.
countries around the world, if they want to be part of this new banking system, they're still going to have to rely on the dollar, because the dollar is not only is it part of crypto,
Yes.
it's backed by the United States government and it's flooded everywhere.
Correct. That is the reason why
makes sense. It makes
what
sense.
when Biden sanctioned Russia, it divorced the dollar. It sent the commodities market into the wild west. That's what it actually did. Now, how that actually affect the dollar? Well, you begin to see Russia, a chief exporter of petroleum or oil, was selling their oil to China, and normally oil was sold with the dollar as a reserve. Not anymore. Russia was accepting the Chinese yen. Saudi Arabia was doing the exact same thing when it came to selling their oil. So they were abandoning the dollar. Now, don't get the choice. The dollar is still the chief currency on the planet when it comes to selling petroleum, but you begin to see how countries begin to not trust the dollar, and China then created their own crypto coin.
Yeah, but the problem is that even when they had China and Russia sharing resources,
Yep.
the problem is that it's China and Russia. China don't trust Russia, and Russia don't trust China. Like, who looks at China's financial market and goes stable? That's something I can believe in. They build cities that nobody lives in just to
Evergrande,
be
yep.
able to put people to work and
Yep.
pay them fake money.
Yep.
In Russia, we already know that Vladimir Putin can make a decision and send the
It's
oil
okay.
market. So there's no stability in the world. The United States is the most stable
Oh,
country.
it is.
So the dollar
is.
is decent. It does a good job. It gives the United States a lot of power because we can just do what we want to with the world's currency.
Correct.
But I mean, the euro's not going to compete.
Nope. Not at all.
It's going to be United States, especially doing this new crypto play. They're going to now dominate. It's going to be infused into the I would say finance 2.0, the new market.
Yeah.
Right.
This
we
is the.
should put that somewhere. That's a good name right there. We should keep that.
What's the name?
Finance market 2.0.
Ooh, I like that. Finance
coin
market
that.
2.0. Yeah, finance
like
market
that.
2.0. Somebody put that in the chat. Yeah, finance market 2.0. Yeah, that's a nice little thing. Now, Cliff, Trump saw that. Trump saw it, and he saw it through Howard Lutnick. Howard Lutnick is a cryptocurrency mastermind.
Right.
His hedge fund actively invests in it, like heavily. He's like the godfather of that thing. It's ridiculous. The sitting Secretary of Commerce is one of the godfathers of cryptocurrency.
Smart
and
guy.
they killing. He's very smart. So Trump saw that, which is fine. And so I'm not a big believer in crypto, but I like the play that he's actually doing from a lending standpoint.
It makes sense from a strategically. It makes sense from a world perspective to dominate, keep the dollar strong
all the time. So when it comes to the China and USA kind of war, just checkmate.
Yeah, man, and you just made me realize something too, because if the United States is more integrated into the dollar crypto, what that's going to do is that's going to discourage fraud. Because if you have Bitcoin, the whole point about Bitcoin is I like it, but if I'm trying to do nefarious things with it, right, I'm doing something wrong with it, I'm going to have to convert that into dollars.
Yes.
And if you convert any crypto into a dollar, the United States is going to know. It is going to be on the blockchain to say, we see what you're doing, Russia. You're taking billions of dollars, put it into crypto, and you're trying to send it to China. But if you try to convert that back to the dollar in any way,
It's
the
over.
United States is going to see it.
This
Yeah,
this
makes
was
sense.
that's why
Makes sense.
95% of all the transactions in the world, guys, are done via cryptocurrency. What does this mean for home buyers and investors? You- Put it like this: the rates will most likely come down. This is the reason why, because I said, why is Trump and the current Secretary of Treasury and Commerce so calm doing this tariff thing? He's so calm. Why is he so calm? Well, we are the biggest consumer base on the planet, 23 trillion. Everybody wants to play with, wants to sell to the U.S. I agree in some form or fashion when it comes to the tariff, as far as bringing parties back to the table to renegotiate terms. I like that play. So I said, why are they so calm? Because their checkmate is crypto.
Yeah.
That's
And
checkmate.
and I've looked at some other ways of, and here I'll give you an idea of how I see crypto integrating into the real estate market. And I think this is a smart idea that
Mhm.
someone could pick up, which is to actually start making renters equity holders into the home. So if you have a
Ooh.
home worth, let's just say $100,000 and someone's paying rent,
Yeah.
with crypto, I can basically I can tokenize the property. And so I can say, okay,
Mm.
it's 100,000, whatever, X tokens.
Yeah.
Okay, every time you pay your rent,
Yeah.
you receive a percentage of X tokens. So that's actually given back to you in the form of equity,
Ownership.
right? So exactly. You're buying pieces of ownership as you go. So now you missing rent. You can tie that to say if you miss rent once, twice, or whatever, if you basically saying if you're forced into eviction, you lose your equity.
Wow, that gives incentive for the tenant then,
To stay in the home, keep
and
it
pay on
right, and
time.
live there for a long time. And the owner of the property, they don't mind necessarily giving up that equity because what they're doing is getting that on the back end,
Correct. So
right? They're
yeah,
making sure the tenant stays longer, and that can be negotiated out. Or what it could mean is whoever the owner is, if he has multiple properties and it's in a pool of tokens, they get access to the underlying LLC that owns the pool of tokens. So now
yeah,
all the renters are systematically starting to own the equity as they go, and it just buys it down. And of course, there may be an additional charge for that, right? It may
sure,
be additional $75 or whatever it
sure.
is, but tokenization makes that real. They can log into a portal and see their equity share.
Man, guys, that is a yes, sir. That's the bounce back right there, y'all. If you are a tenant living in a property right now, and there's a crypto play that you can negotiate with your owner, do it. Do it now. There'll probably be a cap on the amount of tokens you can actually get, because they're gonna want you to pay them off if you choose to buy the property. But if you don't buy it
Mhm.
and you move out, right, to another property, you just give up the equity. Just give it up. That's all you do. It's real simple.
Yeah, I think those terms are going to start coming in. Where for me, just off the top of my head, I would probably say 5 years. After
Yeah.
5 years, if you had no missed payments for 5 years, you could build a 1, 2, 3% equity share
Yeah.
into the property. And if it goes up, and so the question becomes, okay, well, how is the ownership? Because you own it through your LLC, and they have that through tokenization. You just have to
Yes.
look up the token.
That's it.
You could pull up all the where it's tied back to, the LLC chain, all of that. So when they go to sell the property, they have to sell it and redistribute all the tokens to all the
Yep.
token holders.
That is, y'all. Cliff just gave y'all some game, man, and a half on that one, man. Tokenization is it. Matter of fact, guys,
Is going to be the
um,
future.
it is. Cliff, tell them why is tokenization going to be the future when it comes to real estate and ownership?
It makes ownership easier, right? When you go to closing, for all y'all who've been through closing, it's a beast, right? The title has to go through. They have to check your lender. They have to check all that. When it's tokenized, the title can go look up and see all the information on the actual blockchain. It's right there. Pull it up.
Right there.
Anybody can see it, right? Same as public records. Everybody can see the tax records. It'll be the same thing with blockchain. But the difference is when you go look it up, that token, whoever owns that token, it'll say just like a stock where the equity is.
Yeah.
So when they say, "Hey, we're going to pay," what they're doing is they're going to pay back to that token, and it will automatically distribute to all the token holders.
Yep.
You don't. The
Yep.
title doesn't have to figure it all out. The blockchain did that.
Yep. And I say this here, guys, real quickly. Last week or 2 weeks ago, Cliff and I we actually did a video on this. It's called the tokens. Here it is. Guys, do me a favor, guys. Over the weekend, go listen to this Real Estate Friday Live. We talk about tokenization.
But, and y'all need to get on Dale's ass about that. I told him about these pictures.
Ah!
I don't like that picture right there. Y'all be quoting. I'll be like these pictures. You catch me halfway talking.
I'll change it. My bad, y'all. Hey, don't shout me down, Cliff. My bad, brother. It's all good, but
they was all looking crisp and clean. Look at Wyatt with the white hat. He got the clean. Look at him looking clean. He got me. I'm about to say something. I'm halfway. I see what you're doing.
My bad, y'all. Don't shout me down, baby. I look better than on the screen. No, it's all good. Hey, guys, if you could go re-look at this Real Estate Live, y'all. It's called Trump's Biggest Financial Move: How Tokenization Could Disrupt the $52 trillion U.S. real estate market. 52 trillion. 52 trillion, guys. That's what a T, not a B, not an M, a T. Watch it. Watch it, guys. Now, also, guys, investors, we ain't forgot about y'all. Don't we got you, baby. All right. Investors, y'all, with this type of play, we get cheaper debt. With cheaper debt, we get to buy more properties. You get to buy more properties, you get to cash for more properties at a higher price point, and you can flip it if you need to as well also. Because once there's cheaper debt on the market, who comes off the sidelines? Those home buyers. Someone wouldn't mind going from a 2 to a 4% interest rate or a 3 to a 4.5% interest rate.
Right.
Makes sense, Cliff, or no?
Oh, makes sense. I mean, it's what's going on right now. And that's why it kind of ties into. I was going to show y'all something real quick. Let me share my screen right quick. I'm about to show you.
Go and show it to us, Doc.
Right here.
There we go. Here. Hold on 1 second. Boom. Come on now. Boom. And there we go.
So it goes in. You can see it right here.
I got you, Cliff. We'll get rid of this
Trump does the tariffs. Now look at that drop. Massive drop.
Yep. See that?
We had it went sideways and we had another drop. We are down, I think, since Trump has become president, I think we're down almost 12%, something like that.
Yep.
And the reason why I'm bringing this up is because I think there's a restructuring of basically the economics and financial system with the tariffs.
I agree.
And so this is what it comes like off to me. You tell me you see it the same way, Dale.
Okay.
About the way, and it's going to play into the real estate and the interest rates.
Okay.
And so basically what it looks like to me is, use as an example of China. Right now, with Apple, it's one of the largest companies in the world.
Yep.
And they're that large and so profitable because they build in China, cheap, and they sell in the United States to the rich.
Correct.
Right? It's a very expensive item.
Correct.
But when Trump puts in tariffs to say that iPhone that you're buying now for maybe $800, $900, maybe even $1,000, when the tariff gets put on it, now all of a sudden that product becomes $2,000, $2,500. So what happens? Apple stock drops because they can't go cheap anymore. They have to go to another place to build. And so where are they going to build? What are they going to build? Well, if there's tariffs around the world, the smartest place to build is right here.
In the USA, baby.
In the United States. It's probably going to be a Mississippi, an Alabama,
Oklahoma,
an Arkansas, and Oklahoma.
Texas.
Because those are going to be the cheap areas that you can build. And now you don't have to pay transportation like you had to do with China. You have to send over on boats. You have to go through all the. Not if it's in Idaho. Not if it's in Wyoming. But there's a there's a downside to that. And that downside is you're going to get products that cost more. That iPhone is not $1,000, it's $2,000 because it's built in Mississippi. Right?
Yes.
Now, what that does do is mean that when you pay $2,000 for that iPhone, it's more expensive. Yes. Apple's profits come down. Yes. But the place it's being built, let's say Huntsville, Alabama, they have jobs. that's going to be 5,000, 10,000 jobs. So your money
Mm.
is going to circulate back in the United States. It's
Yep.
much like buying local, right? In your own
Correct.
hometown. When you
Correct.
spend your money locally, it stays there. They support the workers who live there.
Correct.
It's the same kind of platform. And so what that
Correct.
does do when everything is local and that money is redistributed to average everyday people through work,
Yeah.
bringing the production home,
Yeah.
interest rates fall.
Mm-hmm. Mm-hmm.
It
Mm-hmm.
has an inverse relationship to interest rates because
It
it means
does.
that we're getting more gross domestic product. We're able to bring down our debt, which makes
Yeah.
people who want to buy our debt realize that we're in better shape and interest rates come down. And that's where you're probably going to see that 4% interest rate.
I agree with that. Let's go a little deeper, Cliff. You're spot on. Keep that up real fast. All right. So what Cliff said is spot on. Let's go a little deeper. Now, he talked about how an iPhone will go from $1,000 to $2,000, right? Because of the tariffs. Now, how do you kind of begin to kind of counterbalance that tariff to where that price point may not be 2,000, may be 1,200, right? What number one, you cut out regulations because that adds that takes away from the bottom line of a business. Because if you have a lot of regulations, you have to pay legal fees and consultant fees to be able to meet the said permits from a city, county, state, or federal standpoint to be able to do business in said area, right? Number two is you cut taxes. So no tax on income, no tax on income, right, Cliff? No tax on tips, no tax on Social Security. They're just throwing some out there. Reworking, keeping the current taxes in place when it comes tax cuts in place when it comes to Trump. It's becoming a better environment for business to business in. So how you begin to go from 2,000 to maybe 1,200 bucks on a price point, but at the exact same time, having more jobs be done in America. Simple: cut taxes, cut regulations. We're good. Instead of you paying $1,000 for a phone, maybe you may pay $1,200 for a short period of time. But I believe also, Cliff, is when we get those trade agreements correct, where when the beat them at Cliff, it'll go below 1,000 because you've already cut those taxes, you've cut the regulations, and you've forced your business counterparts, which is overseas, those other countries, to come to the table and be able to do it right. You agree, disagree?
I would disagree only because
Okay.
the products, so the iPhone is an example. It's made
Okay.
up of a lot of different components. Those components come from around the world. So
Agree.
that still going to be tariffs to actually bring those products in. So you're still going to have a higher price on the tin that they use,
Sure.
the lithium that they have for the battery. All those different
Sure.
components are going to be still
Mm.
those are going to be base costs just for the product itself, for the ingredients of the iPhone, right?
Okay.
So, but I can understand on the taxes because basically what it's saying is if you're getting a tariff, like for that iPhone example, yes, we got to pay more for lithium.
Hmm.
Yes, we have to pay more for the copper. We got to pay more for all those things that make up the iPhone. It's
Sure.
true. We have to pay more. But that cost of bringing those materials in is going to go into the United States because
Correct.
they're getting that tariff payment.
Correct.
Since the United States is getting more money through
Yep.
tariffs,
Yeah.
it needs less money through taxes. And with that redistribution of saying instead of making money through taxes, we're going to get it through tariffs, you can
Hmm.
reduce the tax rate. That's how you get no tax on tips, no tax on Social Security.
Okay.
Maybe even what's being floated is no tax if you're below 150,000 a year. It's like, well, where are we getting that income? It's through the tariffs. Basically, it becomes a consumption tax.
Correct. That I agree with as well. Now, Cliff. Now, let's say through this tariff play, you have countries like China and let's say Saudi Arabia and Venezuela and other countries come to the table and say that, hey, let's renegotiate these tariffs where they're more reciprocal and they're down.
Mhm.
Would that play not bring down the cost of goods and services because businesses can go back to buying, let's say, parts from a China, knowing that the tariffs that they would normally pay is not let's say 34%, it's now hypothetically 10, 11. Does that make sense?
Makes sense. Yes, it's possible if China plays ball or some of these other
Sure.
countries play ball. If they bring down their tariffs to become more competitive, then you're
Sure.
right. Yeah, I can see what you're
Yeah.
saying. If
Mhm.
Trump is correct in the way that he's saying they will back down or we will
Yeah.
come to an agreement,
Yeah.
then you're right. But I, it to me, you're only going to hit those additional jobs, which is his goal. If he doesn't have, there has to be. It can't be apples for apples, right?
I agree. I agree. I agree.
Or else it still would make sense to go to China for a
Sure.
lot of our stuff if it's equal, right?
Mhm.
But what it does do if we bring it equal is it now makes it more competitive to invest in China. Because
Well, I
right
don't know because China wants 51% of ownership of your company.
exactly. So it from you're talking about from a governmental standpoint. That's true. But
Okay.
from I'm talking about from a tariff standpoint.
Got
If
it.
right now tariffs from China is like 60%. So if you
Okay.
want to sell something in China, they're gonna mark it up 60% to sell it.
Of course.
If from China to the United States, it's like 5%. It's nothing
Okay.
to ship
Mhm.
it back in.
Yeah,
If it
nothing.
becomes equal, 30%, 30%, something like
Mhm.
that. Now that allows companies in the United States to go, now we can go to China and sell our goods because the tariff was brought down. We can actually go compete. The only problem, like you said, is you got to deal with their laws and regulations, which
Yeah.
he said you own nothing.
Yeah.
It's
That's the
it's
problem
G's.
with doing
That's
business.
G's
So, yeah,
business. That's G's
all
business. You know what
yeah, yeah, it's G. So ain't sure it's G. So it's
Right.
that's the one thing that I do see. Now I will say Canada's come out and said that, you know what, one of the premiers, we go down to zero tariffs.
Mm.
Mexico, when they sit down and talk. Venezuela, the same thing. India, the same thing. Pakistan, the same thing. You're beginning to see a lot of countries are saying, "Okay, hold on, wait. Let's come to the table now," because Trump is trying to revamp the financial markets and the manufacturing markets. He wants he wants the U.S. to be not only the banking capital of the world, but also the manufacturing capital of the world. And he may just get that.
Yeah, I think you're right. The way to be able to do that is I think most of them will negotiate except China.
Mhm.
I think we'll
Yeah,
keep it up against China because
sure.
now that incentivizes instead of going to China, you can go to Vietnam, you
You
can
can.
go to India
Yeah,
because the tariffs are better and it opens up markets for US businesses.
it does.
Because for example, India I think has like a 70% tariff.
Yeah,
We can't
ridiculous.
go to India. It's too expensive.
Yeah, it makes no
But
sense.
if it becomes equal, now we can go into India and compete.
Mhm. Mhm. And guys, this started with Nixon. Nixon started this. Nixon did it. Then it went to Carter. Then went to Reagan. Then went to Bush one. Then it went to Clinton. Then went to Bush two. Then it went to Obama. Then it went to Trump, who tried to change it. And then it then went to Biden. Then it went back to Trump. You know, the only two presidents that actually tried to change it. Only two presidents. Actually, three. No, it was two. Is Trump and I think it was Reagan. You know who's
Mm,
been the worst out of since Reagan, since Nixon on up to Trump?
Clinton.
No,
Hmm.
Bush.
Bush. I could see that. I could see that because he brought down he wanted more free market.
Yeah, Clinton's number two. Clinton's number
Mm.
two. But Bush was trash. That was man. I'm still disappointed in that dude, man. But he trashed, man. He trashed.
Yeah.
How does this make sense for you guys in real estate? It's very simple. We're showing you this stuff, guys, because of the fact that be ready for the shift. It's coming, right? Be ready for the shift. Cliff and I we're ready for our counter move. Cliff sent me over a deal, guys. In Texas, I ain't gonna tell you about it because it's my deal. It's our deal. You know what I'm talking about? But at the exact same time, it is a new construction deal in the middle of a developed subdivision.
Mm.
I said, "What the world?" Cliff, I got 6 apartment complexes in Michigan. I'm looking at 6. 6. I'm about to partner with someone that the deal flow is going to go up because of the fact that we're ready. We're ready. We are buying. We are buying in Jackson. We've had to make some adjustments
Telling you.
to some property management issues. We made do a real estate live just on property managers. How trash they are.
Mm.
They
That'd be a
trash.
good one. That'd be good.
They
Let's walk people through it.
They trash, man. But yeah, man. But Cliff, man, that's all we have for today, guys. We went a little bit long, guys. Before we get off, guys, hey guys, real quickly here. You know, guys, we have an ebook here. It is called Distressed Property Investing. I like that better, guys.
Man, I want to cut you off. Man, I gotta hop on right now. I gotta hop off right now. My bad. I got some. But man, appreciate y'all. Man, get the ebook. Check it out. I gotta hop off. Man, I appreciate y'all.
Right. Go ahead, bro. Go ahead. Guys, it's what happened, guys. When it comes to business, guys, things just happen. Things happen. Anyways, guys, real simple. Now, here it is, guys. This is our free ebook called Distressed Property Investing, guys. It's very simple for you to get, guys. It is how to find, locate, as what? Let me get this thing out the way. Hold on, y'all. This thing, you can't, hold on a second. How to find, locate, and close on your first of not many distressed properties in your city, county, or state. Now, I'll tell everybody that when it comes to real estate, you make money when you acquire real estate, not when you sell it. And the best way to make money fast real estate is through strategy and mentorship and community. This is a free ebook, guys. You can scan on the QR code, guys, or what you can do real fast, you can click in the show notes below, on the link below to download it. It is completely free, guys. At the exact same time. And lastly, what you can do also is this here. You can DM me the word real estate. DM me the word real estate right here on the left hand side, guys. And my team will get you out the link today, not tomorrow. Today. It's called Distressed Property Investing, guys. We're giving it away for you guys for free. Well, guys, man, thanks so much for your time. God bless you. Hope you guys had a good day today, guys. A lot of information we shared there. We shared a lot of information on political, how the politics bleeds right into real estate and business. So I hope we gave you guys some good wisdom and some counsel. And Cliff is right. We may end up doing a real estate live on the horrors of property managers. The horrors. And lastly, guys, before I get off, guys, every Thursday, I do another one called the Counter Move Podcast, guys, where we take an issue, unpack it together, and reason together, guys. Here is a little bit of a clip on it real fast, and then we'll be out. Here we go.
Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them, ain't much in common. I set a goal for me 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
Guys, that is the Counter Move Podcast every Thursday at 8:30 p.m. CST, guys. Come kick with your partner, man, as we look at some issues from a political, social, economic standpoint. We unpack it together, read together, and we prescribe the right counter move to that situation. But guys, thank you so much for your time. God bless you. If you need anything from me, holler at your partner. Again, if you are wanting the free ebook, here you go. One last time before we get off, guys. Scan on the QR code right there, or you're welcome to DM me the word real estate, and my team will get you out this exact same link for you to download the free ebook. But guys, thank you so much for your time. God bless you. You know I end it every single time, baby. Before you leave and while you can, you see that thing, baby. Take that damn picture and give it to mama. Holler at your partner. God bless you guys. See you next week, guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit, I had no money, so I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property. Right. The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made that lion's share of my money.
Wow.
People were
Okay.
actually running from the cows. I was running to it
Of course.
because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course. Of course.
I
Of
said,
course.
okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties, and I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holler at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks.